Okay, so in this video I'm going to talk to you about the 4 main ways to use one price profitably. This is going to be a longer video, so as you can see next to this video there are time segments. So if you need to come back and rewatch this, or if you want a refresher on any part of this video, just fast forward to the time stamp and you can access that section of the video. So I also want to note that I'm going to show you quote-unquote perfect examples, and although I could pick almost any day, I want to make sure that what I'm saying makes sense so that you understand the concept. And then when we're done with the 4 in the same video, I'm going to talk to you about imperfect examples, because obviously sometimes price does not go to the tick, sometimes it goes right through the line, etc. So the very first strategy that we're going to talk about is using one price as a target. I believe this actually was one of the examples I gave in a prior video, but either way it doesn't really matter, because the habitual pattern of one price over the course of time, regardless of how many days you have loaded, I have 90 days loaded here, it's going to have a very high probability of being tested. And so the reason why this is important, the reason why I built analytics into the indicator, in addition to proving the indicator, which was one of my biggest annoyances with indicators, is you really had no way of knowing exactly if it was actually doing what it claimed to do. And so, because I want to make money trading and not just be entertained, I want to know that the tools that I'm using are reliable. And so for me, this is very important to have something like this, because what it also does is it gives me a tremendous amount of confidence in knowing that I can execute a position and have a pretty good chance of making money in that position, which is the objective of all of us. So the first way to use one price is to use it as a target. What that simply means is that you have entered into the market, either long or short, and your exit would be at or around one price. Now let me talk about that for just a second here. When I say at or around, I'm almost always not going to put my entry or my exit on the exact price. So this particular day it was 28.27. I'm usually not going to have an order sitting at 28.27, and the reason why is because of this, as you see right here. When price goes to the tick, there's a chance that you can get filled, but the reality is that if there's not the amount of orders in at that exact price, let's say you have a limit order in, there's a chance it will not fill you. Okay, there's nothing more annoying than having an order in, the market is sitting on your order, and then it just takes off. So what I like to do is, and this is just me, okay, you're gonna have to figure out what you prefer, but what I personally like to do is place an order in front. So if I'm gonna be short, let's just say I short it up here somewhere. If I have this as my exit, then I'm gonna be 1 or 2 ticks above that. So I'm gonna have an order in at either 28.27.25 or 0.5. And the same applies for entries. If I have a limit order, let's say to go long, it's going to be in front of this price. Okay, so the first way to use one price is as a target. So I'm not here to tell you how to trade. I'm not here to tell you, what to do. Just because one price. So if we look at where one price formed, it's about 6 o'clock my time. It's going to be different depending on where you are in the world. For me it's 6 o'clock, and we are near our highs of the overnight session. So this is still in Globex. So for me, the regular trading hours is at 7:30 my time in the morning. So we're just sitting at our highs during Globex, and so if I see one price is formed all the way down here, that's a pretty good distance. What I'm going to want to do is look, okay, does it make sense to go short and use one price as a target? Or does it make sense to maybe, this market's really strong and I got to be careful of short positions. So again, I'm not here to tell you how to trade or what to do, but the bottom line to using one price as a target is very simple. Look for opportunities to get in the direction of where this target is at. Okay, so if I see one price all the way down here, Does it make sense for me? Is there a breakout? Is there some other indicator that I use, or some other strategy that I use that is telling me to get in? So for me, that is what I look for. So if that makes sense to get in short, I'm going to get in short and then use that as an ideal target. Now that's quite a distance away. If we only peaked out here and you didn't take profit somewhere in here, or at least secure entry, that's something that you want to consider, because giving up several points, and depending on how many contracts you trade, that could be quite a bit of money. You obviously don't want to have that happen. So you just got to make sure that if you're going to use one price as a target, that it makes sense for your trading style. And that's really all that I probably can say about that, because it's not complicated beyond that. Okay, just make sure that the direction that one price is at as a target makes sense for getting into a trade in that direction. Okay, now the second way that one price can be used is a test. And what that means is that I'm going to be basically contrarian to current market movement. So obviously market's heading down here, we can see it's running down, and so what I would do in this case is I would test this as support, right? So I would already have an order in, ideally, that's my opinion, to have an order in, again, 1 or 2 ticks above was what I like, above this price, to test this to go long. The reason why I would even consider doing that is because, one, I know that if and when price does get, obviously it's not 100%, so the last 90 days was 98%, that's pretty dang good. There's probably a good chance that it's going to have a reaction off of that, if and when it gets there, which it did, and it had a really nice reaction off of it. So I'm going to want to test that as support, okay? And the reason why I would do that is because I can look at 100 days, 1,000 days, 10 days, and I can see that over the course of history, one price has an extreme probability of the market reacting off of it as support and or resistance. Does it always happen that way? No, of course not, and we'll talk about that on the imperfect scenarios after we're done with these 4. Okay, so on number 2, using this to test the market as support. Okay, so one of the things that I've learned over the years, I began trading in 1995, that I was fortunate and I was able to learn a lot of what I do from a couple of different fund managers who are extremely successful, and I just applied it in my own way. And one of the things I learned many years ago was that I was talking to one of them, and he said, look, Sean, you just have to get in the market. In fact, it almost doesn't matter what you do, buy or sell. Your skill has to be built around how you're taking profit or cutting losses. And one of the things that I learned was that when I get into a trade, no matter what it is, I ask myself 2 things. Am I wrong or am I early? Now, let me back up though. I ask myself these 2 things if I'm not winning the trade. So if the trade is going against me, I ask myself, okay, let me take a step back here. Am I just totally wrong about this trade, or am I just early? And the answer to that will determine what I do next. So I don't mean to turn this into a different subject, but what I want to help you understand, or at least the message I want to get across to you, is that if you have something that you're relying on that has, in this case, we can look at statistics. We can go back in history and look at the incredible performance of this. If we know that it has a really good chance of acting as support or resistance, then that's a trade worth taking. It's worth risking that, as opposed to probably a lot of the other trades that you're taking that you don't, when you get into the trade, you're really not sure to begin with. So this gives you a higher chance of winning that trade. So the second way to test it as support. If this chart was flipped upside down, this of course would be resistance. Okay, so we would test it as resistance. So if price is coming up to one price, then we would test it as resistance. Okay, so that's the second way. The third way would be very similar to the second way, and that is a retest. So that is when, and I'm just going to keep charts here, that is when price was successful at testing as support, and it went up, you know, any amount, and then it came back to retest it. This would be considered a retest. Now, do they always work like that? Of course not. But it did here, and it does do that quite frequently. So this would be a third way to use one price as a trade opportunity. Okay, so that would be a retest. Okay, now the fourth way, I need to scroll to a different day, is what I would just simply refer to as a break and retest. So give me a second and I'll scroll back and we'll go to that one. Okay, now it looks like the movement, if you don't look to the right, is quite small, but actually it's quite large. So if we look at where it tested here, we can see that it dropped. Now initially it doesn't look like a big drop, but this was a very large moving day. This drop right here is actually about 8 points. So we had some really big movement that day. So what this fourth way to use one price is again what I call a break and retest. And what that means, so for me there's a couple criteria. And then when we talk about the imperfect scenarios, I'll show you a different variation of this. So ideally, you're going to want to have it test as the most obvious. So, you know, when one price formed, price is all the way down here, and so potentially we would look at this as a target. Okay, we would look to go long, you know, again, whatever strategies you're using, find a long position. Okay, so here's our first test, right? So then the break would be through this area right here where we have clearly broken. We're making higher highs and higher lows in our candles. We're above that, and we're progressing in that direction. So then the retest, of course, would be here. So this would be the fourth way to use one price as a retest. I know this is small. I just wanted to show you this example here. Okay, so here would be on this candle, this red candle here where it first touched one price, this would be the entry. Okay, and so we've tested it as resistance. Okay, so that's criteria number one. We've clearly broken. That's criteria number two. We've had a significant reaction from that. In other words, you know, it broke through that. Don't ask me ticks, don't ask me points. It just comes with experience. I get questions that are asked, well, how much does it have to break? You guys have to understand the market does not react off of your stop losses and off of your profit targets and off of your conditions on how much something has to break. It's not how the market works. The market is very fluid and it doesn't stop. And so what we have to do is we have to be adaptive to that. So for me, there's no magic number. I just prefer to see a significant break, and as long as we had that, then that's good enough for me. Okay, so that's that. So we've had a significant break. It attempted to come test it here, it didn't, so we had succession to the upside. So this is really nice. Okay, so we have a test here, and this little push up right here, that's about 8 points. So that you kind of puts things in perspective. Each of these increments are 5-point increments. This is a really, really big day. Okay, so we tested as resistance, we had a clear break, and then we retested it as now support. Back in the day, I used to call these Z formations, because if you draw a line down here and then up through here and then back down to the line, it makes this Z. So very simple. There's no magic to it. We just need the ideal parameters are we test it once on either side, in this case resistance, we have a clear break, and then we retest it as support, and boom, there's a nice little trade there. Okay, so we're not going to pick apart these. Obviously retest it here again, retest it here again, and both of those were nice trades. Now let's get into the imperfection of the market. Okay, so I actually just had to scroll through about 20 days or so because it took me a little while to find a good example of imperfection. But I wanted to talk about this first one because it has to do with failure at testing one of the 4 strategies. So on this day, obviously, I'm going to just get rid of this box, right? We don't really need that anymore. Obviously, this worked very well as a target. So if you're going to use one price as a target, this day it worked perfect. It was beautiful. Now, it did not work as resistance, as a test. So if you had an order in here, you had, let me just get my crosshairs up. So it hit at my time 8:41, and it basically, to me, failure was at 46. So 5 minutes, took about 5 minutes for this not to work out. Okay, so price comes up and it tests one price, and it's, you know, it's kind of toying with it back and forth, and it's not, you know, by this time it's not working. We have a breakout right here, progressively higher highs, then we just kind of sit here through this garbage. So if you got in here and you sat through all this, then, you know, again, I don't know how you guys trade. I don't know, you know, what your account sizes are like, you know, if you can handle, you know, if you freak out if you're down 2 points, or if you can handle a 200-point loss. I mean, I don't know where you're at with that. And so it's very impossible for me to say, use this as a stop loss or use this as a strategy. This is the reason why in the beginning, during the 4 strategies, I explained them the way that I did, because each of you will have different ways of managing your own money. Okay, so this one did not work. Did it work as a target? Yes, beautifully. Did it work as testing resistance? No, it did not. Did it work as a break and retest? Yes, it did. And it retested it again, and it came back and retested it again, and it took a long time for this third retest to have success. So there's a couple things I want to point out here, but the bottom line is that there's no you know, necessarily right or wrong way to do this. This really comes down to trade management and what you do as a trader. I know traders, I happen to be one of them, who when they get into positions, and I think I explained this in one of my other videos, if I'm in a position, you know, well, let's just say I did this, short, I almost always have another short target that I'm looking at getting in. I don't know this day, I have to go back and look. I don't know if I would have had one up here. I'd obviously like to say I would have, but I don't know that that's true or not. But let me just give you a scenario. So if I'm going to be short, remember what I said earlier, if I'm not winning a trade, what I ask myself is, okay, am I just wrong about this trade, or am I just early? If the answer is that I'm just early, then I'm going to look to get in again and potentially, you know, get in somewhere up here. Ideally, hopefully that would have been the case. And then as price comes down here closer to my entry, I'm going to take profit on that position, and then, you know, hopefully break even or take a small loss on my original position. That's one way to do things, but again, I'm not here to teach you how to trade. I don't know what your account sizes are or what your strategies are, but I know a handful of traders that do things like that, which is why I bring it up, because just because something isn't working, it doesn't mean that you're necessarily wrong. You just might be early. Okay, so in some ways I regret mentioning that, but I think it's a very important concept to understand. Okay, so as price came up and tested this level, it did not have succession. One of the easiest ways to do that is simply by looking at candles. Are we having higher highs and higher lows? Are we setting lower lows and lower highs? If you look at this, when we got into this trade, we would have been filling this candle. And if you did the, you know, a couple ticks below, you probably would have been filled down here maybe. Okay, we are continuing to set higher highs and higher lows. We do have a potential drop here, but this candle here did not surpass this candle, and then this one that broke out above, obviously the same thing is true. Okay, so when that happens, it might be a sign that, okay, this is not working out. The bottom line of what I'm saying here is that when you get into a trade and you're using one price, you know, as, you know, to test as support or resistance, and it's not working out, it doesn't necessarily mean that it's not working. Obviously, this trade gave several points, depending on where you got in, as a target. The market just continued higher. There was more demand to push the market higher, and that's where it went. And so that is just what happened. So now here we are coming back. So let's say you took the first one, you got, you know, profit there. You took the second one. Let's say you know, maybe you use stop losses, or maybe you just, you know, you cut your losses through here, and, you know, you're waiting for the next one. Now you take this one and you got all that back. Maybe you test this again and you made more money there. Maybe you test this again and maybe you got nervous down here and you took a small loss. Okay, now let's look at a scenario where we have two back-to-back that, I got an email one time from someone saying, this worked beautifully as a target, but it blew through it, and then it came back and blew through it again. And so I want to talk about a scenario like that because this will happen, especially if you use this for Forex. Forex is, quite volatile, and you don't, with the indices, the ES, NQ, the YN, etc., you're going to have a little bit more perfection, although it works very well with Forex. We're not going to go over Forex. I just want to stick with one thing here, but let me just show you an example of, let's go to crude oil, and I'll show you an example there. Okay, I actually had to go to the 6E because CL looked too good. I think I looked at 30 days and it was all just too good. I couldn't find the scenario that I wanted, but let me actually talk about this one because even though this one's a little bit better example, I want to illustrate it by talking about this one. Now, you got to understand a couple things. One, this is the 6E. This moves very different than the ES. Okay, so you're just not going to have the same type of movement that the ES gives, or in fact, most of the indices, we could look at the NQ or the YM or whatever, but and even CL, they're all going to be, very similar in their exactness. So this lower one here, so what will happen is one price will continue until it gets filled, until it gets touched. So this was one from a prior day. I don't want to scroll back and find out what day it's from. It's really besides the point. It doesn't matter. And this happened my time at almost 2 o'clock in the morning. So this is during Globex, and the market does what it does. So you could look at this one and say, well, it blew through here, and then it had a significant break, and then it came back for to test this, and it blew through it again. So here's the thing, and number one, it worked beautifully as a target. So if for some reason you were short anywhere leading up until the time that it hit, I mean, it nailed it. Okay, so another thing is, you want to get filled on your exits, right? Just as you want to get filled on your entries. And that's a pretty awesome thing to have happen because it filled you on your exit. Now, as testing, if you were up at 2 o'clock in the morning and you were trading this and you had an order sitting there waiting to go long, again, I don't know what you use as, account management, if you use stop losses, if you don't use stop losses, if you get in again at a lower position like, I described earlier. I don't know what you do. So it's very difficult to say if you would have lost that trade. I don't know. It's impossible to say. Let's just say you did. You went long here and you got out down here. Okay, now I'm going to go short, and then obviously a scenario like this, there's a lot to be said here because the way that my core trading says that, and let me just explain this to you. And this, again, I'm not trying to teach you how to trade. But if you're in a trade here, let's just say you are still in this here, and it doesn't matter what market this is, just forget that this is the 6E, because I think this is really important. If you're in a trade, it's not working out, and this doesn't reach your parameters for getting out of a trade, you're still in it, and it's coming back, it might be a really good idea to just get out of that position, because this is a very long trade. You're in this thing from 209 to, you're almost in for 30 minutes. About 25 minutes or so. That's a very long time to be in a trade that's not working out. Okay, it's a really good idea to do one of two things or both. Get out of that trade. Okay, consider yourself lucky that you were able to break even on that trade, and perhaps consider going the opposite direction. Remember, if there's an old saying that I learned many years ago, if something doesn't do what it's quote unquote supposed to do, I quote supposed to because there really are ideals in the market. If something doesn't do what it's supposed to do, then it might be a sign of something. What that means is that if price is not progressively setting lower lows and lower highs, and it reverses and sets higher lows and higher highs, it might be a sign that it's reversing, right? So if you got in this trade short right here and it's not working out, and we're trying to set higher highs, we're trying, and we're coming back, hey, this might be a retest. You don't know it until it happens. I'm going to get out of that thing. Get out, break even. You took a loss here, you broke even here, reassess. Okay? Possibly consider going in. That's another one of the strategies, right? A break and retest. Okay? Now, here is the RTH, the regular trading hours. So here's our new one. Here's our old one. This line, can it be used again? Yes and no. Look, here's the thing. Price is only going to hit a level so many times before it is done with that price. Okay, so you have to be very cautious. When you're using older prices, if it has already been used, there's a chance that the market doesn't care about that price level anymore. Okay, so you need to be very careful. I'm not going to break this down here. You just need to be very careful if a price follows through on another session like it did here, and it's already been used. You need to be very careful about that. Okay, so this thing tested it. Let me expand this a little bit. It's actually starting to work out. You're in this long, it's working out. Ah, crap, it's not working out anymore. Okay, so now, you either got in again or you got out for a loss. Okay, now we're up here for the a break and retest. So this would be the retest, right? On a break and retest, right? So you're short here, and here's almost the identical scenario as we just talked about over here. Almost identical. So I'm not going to break this down because it's the exact same thing. It's the exact same thing. Okay? The rest is history. So there's a couple of examples of imperfection, but even with that, as a target, obviously it's, when the market breaks through these price levels, those are money trades, obviously. When we're using as support and resistance, depending on what market you're trading, you will have scenarios like this. ES doesn't really do this too much. It does happen, and it can happen, and you can look for yourself. But when you're using this as something to rely on, which obviously even this has a bit lower percentage than the ES, has an 89% over the last 90 days. So it doesn't get filled as much. But you also have to realize Forex is so much more volatile and has so much more movement than the indices. You're going to generally have this type of scenario with Forex and Forex futures. Okay, but that shows you kind of the idea behind imperfection. But even with imperfection again just means that we didn't have a perfect bounce off of this. We didn't have a perfect drop off of this as it came to retest it. We're kind of just blowing through these lines. But even with that, when that happens, there's still money to extract out of these price levels. It's just a matter of navigating the trades once you're in them. Okay, so this is what I would consider an imperfect example because it doesn't fall suit with what ideally we'd want. The good thing is it doesn't do that all the time. If we fast forward to today, we had a beautiful, two of our strategies worked perfect. So from the time it opened, it worked beautifully as a target. It actually went to the tick today, it looks like, and then it's had a beautiful reaction off of that. And that's going to be a lot of days are going to do that. You're going to have a lot of days to do that. Now, one last thing I want to say before we wrap this up. This is a very long video, but again, just use the quick references when you want to go back and review this. Let's say you were in here short, anywhere in here, okay? You have a nice big drop here, and then you're sitting through this and you're thinking, oh my gosh, I can't believe I just let all that profit. And then this drop saves the day and you're back in. Look, even though that this is a target and you would have won that, there will be days where it will do this, just like you see here, and then it doesn't look back and it goes up. So a word of caution when profit taking. I believe historically, and I'd have to run numbers, and I'm not going to do that, but I believe historically if you just use it as a target, overall you're going to come out ahead. But you want to, at some point, especially when you're in such a big, that's a lot of money there. If you were in at 6,400, let's say, 0.16400, this price level looks like it's at 0.16160. That's huge. That is a lot of money. So you need to figure out how you are going to manage your positions. Are you going to secure at a certain point? Are you going to just let it go and do its thing. You know, if we were to look at CL, because I know CL I think did this the last day or so. So this is almost identical with CL. If you look at what happened here, we know we had it dropped and it came back up and it dropped again. It didn't get there, and then we had this big run up. But then look what happens. It goes all the way down, it touches it to the tick. So, you know, you don't want to assume it's just going to do that. I mean, obviously we can see the percentage. CL is pretty high too, 96% fill rate over the last 90 days. That's pretty amazing. There's a lot of money to be had in this drop right here. Okay, so just something to think about as you're trading this. So anyways, that's a wrap. I hope I've covered everything on the 4 strategies clearly so that you can confidently execute these trades. Just in the last 2 days, I got 2 emails. One email, I made my first one price trade. By the way, very first day he installed this on his computer, $300 per contract. That's not bad. Another email the next day, over $700 per contract. And he made a comment saying that I never trade with less than 10 contracts, so do the math. I am very happy. So this is something that, if you use right, can produce incredible returns. So just learn it, practice it, and you know, the good thing about it is there's not a bunch of squiggly lines that you have to worry about what they're doing or lagging information. You're using something that very habitually reacts to the market. And if you have any questions, please send me an email and I'd be happy to help you.